Today we're going to talk about time and price. Stay tuned, traders. We'll be right back. Good day, traders. I'm Stacey Burke from Stacey Burke Trading. Middle of the week, Wednesday. Hopefully everybody's had a couple of trades maybe that have fit their playbook, best trade setups. We've had some fantastic textbook trades the last couple of days. Today we're going to talk about time and price, and we're going to also talk about eliminating variables. But first, I just want to share sort of how I've evolved in trading with getting to this 12 candle window. One of the things that over the last 20 plus years of studying the markets is that I've had some fantastic education, a ton of amazing mentors, courses, books, seminars, but piecing all of that together over time was a very painful experience. And as I'm sure that you've experienced yourself, there are times and places when lots of little strategies seem to work, and you think you've had the aha moment, and you go back, it works for a couple of days, or the next day the market throws something completely different at you, and all of a sudden you're back to where you started, throwing your hands up in the air. You take a bigger loss than you planned, you get frustrated, you revenge trade, you get angry, and you go through this inconsistent cycle of ups and downs, but you can still see that the market can be traded, that you look and you go, how did I miss those great trades? And you see a big move that lasts for a week and you think, wow, I could have made all this money. But what I found was that I was the problem. I was the one who was inconsistent. And as you learn something new, later you forget about it and it comes back later and it fits into the cog somewhere and helps the wheel form and take shape. And that's sort of what happened with me. I had just some fantastic instruction, and everything comes back to the basics. One of the reasons that I stick to this plan for myself is because of all the challenges that I knew that I've experienced in a lifetime and that I continued to learn from. And it's all about just peeling back the onion one step at a time until it's almost impossible to not make things so simple that you can mess it up. Now, I had somebody say the other day, well, where's the results for your theory and everything? It's not a theory. It's about me and how I approach the market. It's what I do. And that's the whole point, is I'm trying to share that with you so that you can eliminate any of the hurdles that you're having with your trading. You don't have to follow this. You don't even have to watch these videos. But I'm grateful that you do. And if you like it, hit the like button. That helps YouTube, the algorithm, share it with other people, and I'm committed to getting better myself and helping other traders get better. Quit giving money to the other side, which I think this market is completely manipulated. But the great thing about that is that when you understand their playbook, we can piggyback on their trades. So making things really super simple, when you have an edge, you can duplicate that over and over again, and you can scale it up in size. I want to take as few trades as possible, but I want to participate in the trades where I have the greatest possibility of my edge being exploited with a tight risk and increasing size. That's what it's about for me. I don't want to try and trade all the time. I tried that. It's stressful. It didn't work for me. I want to take one or two, I have a few trades that when they go, they're over in 3 or 4 candles and it's done. But it's taken me a long time to filter out all the other garbage, not only in the market, but in my head, about how to make things so simple that it's impossible to screw it up. So let's review. Time and price. Okay, so first we talk about structure. What's the pattern? What's the pattern of the trend? Are we inside of a geometrical shape? Are we inside of a breakout range, Monday, Tuesday, Wednesday, Friday, Monday, Tuesday? Are we up high? Are we down low? Is there geometry there? What's the pattern of the trend? Is it a breakout? Is it trending? Is it sideways? Have we hit, are we already currently in a breakout from yesterday? All those little things that when we go to the screen, we can look at and say, okay, here's my big picture. We're already in process, or we're potentially going to be in a measured move for more than 50 pips. And we talk about the timings. For me, timing is almost my golden rule, because I know without a doubt every single day they move the market inside of that 12 candle window. There's usually a stop hunt and a trap, and there's usually a trade. And we talked about this yesterday about how we can almost take that 12 candle window in a majority of the cases and narrow it down to 8. And if we look at the first and last candles of the hour on the 15-minute charts, now we're down to 4. And in a lot of cases, based on the pattern of the trend, it's basically 1 or 2 candles inside of that window. So, high and low of the day, we look for trend trades, we look for reversal trades, and we look for range trading markets, where the market potentially is in 50 to 100 pip market, where we can possibly be buying low or selling high inside of that trading range. Round numbers, most of these trades come off of round numbers. Now, some of the volatility, since it's gotten back to normal, we've seen those ranges tighten a little bit, and the quarter levels have become a bit more obvious again. But the bulk of these trades go from 50s and zeros, 0 to 50, 50 to 0, even though we may extend out 25 pips. And I want you to think about that and understand what that is. That 25 pips is typically the stop hunt on top of traders who are in at the round numbers. So not always, but in the majority of cases, that 25 pip extension on either side will often be the stop hunt before the market locks in a high or a low and moves back 50 pips or whatever that may be, 100 pips, 40 pips to the other extreme. So that's why it's important to identify, are we in a trending market? Is it a false break, a 1, 2, 3 to hit the stops at the high or the low? Or do we already have a high and a low locked in, and the market does a 1, 2, 3 into the highest bull candle or the lowest bear candle where the market has already flipped the book? We're going to talk a bit more about that in the next video, the highest bull candle and the lowest bear candle. And that is why often traders are waiting for them to go to the high or the low. They do a 1, 2, 3 or a big candle stop hunt, jamming traders in either up top or down low without taking out the extreme before reversing it at the US Open for a 50 pip or more move in the other direction. So the question then is studying the stop hunts. 3 pushes, we might see 3 pushes evolve over the London session for a sell-off into the US Open. Or we might see a 1, 2, 3, 3 bars, 3 bursts from inside of the range, taking out the low or taking out the high before reversing. And the 33 trade, which is where we might get 1 push, 2 pushes, and then 3 little bursts inside of a peak for the reversal the other direction. Then we talk about, again, just reviewing the end and the beginning of the hour, the 15-minute rotations. Now we talked about this. I'm not going to go too much in depth yet. The 915, so the importance of when the 15-minute, the 1 hour, and the 4 hour all roll over together. Now if you think about it again in terms of when the equity markets open, they may already have the high or the low locked in if they're reversing the market. And if we're at numbers, this is what we're going to talk about today, how you can get better at eliminating execution problems with getting into the market and getting the best price, locking in your risk and your profit target and letting the trade play out. So when we know if we've got our thesis, we see the market setting up. Last night's an example. They consolidated inside of the highs on the pound Aussie, pound New Zealand, and then they did a 1, 2, 3. They jammed into the highest bull candle on the pound New Zealand. They took out the high on the pound Aussie to double zeros, 75 on New Zealand at the end of the hour just prior to the 12 candle US session open. So there's an example. It was a 33 on the pound New Zealand and a third push to the high on the pound Aussie, hitting the stops, and it immediately reversed on the next candle. One of the ways that you can that I work on, again, eliminating variables, trying to get a best price, sitting there trying to hit it when the market's up at the price level at numbers. And they're, traders, they'll hit the price and pull away. I put a limit order in at the numbers with my stop and my target in place. And it's amazing. That trade, the algos, whatever, the smart money, they hit that and pulled away immediately and reversed 50 pips almost in 2-3 candles. It was fast. No heat on the trade. My point with that though is that that's a very low stress way to trade. And it also eliminates me out. I know if I'm trying to get a fill price, and we're going to talk about the timings of this, but they will flash the price. They will flash the price and pull away. When you hit the mouse, they will give you a poor fill. You ever notice that? You click the mouse at a fill price, and immediately your fill price is less than what you wanted. It pulls away and they give you a poor fill price. So part of the way to beat them at that game is to put a limit order in. You can limit order in with the spread, you can limit order in at the numbers, you can limit order in at the market price that you want. But when I put that in, I've locked in my risk. And that's the key thing that I try to work on every single day, is making sure I lock in my risk. I know how much I'm going to lose, but I've got my profit target locked in. And timing wise, price and time, if I know that it's at the end of that 15-minute candle, I'm waiting till the last minute before I put that order in. So now we're down to the 1-minute chart without leaving. Just let me rephrase that. Okay, I'm on a 15-minute chart, but I'm well aware that I'm heading into the rollover for the 15-minute, the 1 hour, and depending on when you take this, possibly the 4 hour. If you're in the earlier hour, it's going to not be the 4 hour yet, but if you're in that second hour in that 12 candle window, you're going to be rolling over the 1 minute, 15-minute, 1 hour, 4 hour, all at once. But this is after the move has set up. So I put my limit order in, my stop loss, and my profit target, and I let the trade play out. So you're almost like an algo in that sense. And they hit your fill, you're filled now, and now the market's going to do whatever it's going to do. But you have executed flawlessly your risk and your profit target and your entry. You're done. The trade is over. But very specifically, at the right time, after it's set up, right down to the last minute in that rollover for the 1 minute, 15-minute, and 1 hour. Not because I'm trying to time it on the 1 minute, but because I know that even in the last 10 seconds, they will move the price 6 or 7 pips the other way and make you chase the trade if they're going to shift the market. And that's what's important for me. I know that I'm going to get a worse fill, so once I've got my thesis, I see the trade is set up, it's confirmed in that last minute prior to the candle closing, I will place my limit order at the best price that I want, and I let the market play out and go from there. Hopefully that again helps me reduce the number of impulsive mistakes, chasing price, a worse fill, getting scared, getting fearful, chasing all those little things that I know will muck up my trading performance. Now some traders may not like that. I like that for myself. I know what it's like, and I know that if I want to keep trying to build size into trades, because I've made a ton of mistakes on all the other ways, and over time I just keep evolving it to get better and more efficient, timing wise, and in the beginning of the hour. I want to see the stop hunt. I want to know that they've taken out the higher the low, or they've done a 33 into the higher the low, or they've done a stop hunt into the trend for a continuation, whatever that may be. And then I just talk to myself, focus on your breathing, you executed properly, you've done everything right, the timings, the stop hunt, the trap, the trade, relax, stay calm, let the market do what it's going to do. Number one, you've managed your risk, you've entered in at the best fill possible, so you're fighting for price. If I miss the trade, I'm okay with that, because I know there's one every session. There's a trade every session. And every 12 candle window essentially is the same thing, regardless if it's into Asia, London, or New York. They set up the same, and if you start going back and just drawing your highs and lows, you're going to see that the same setups happen from block to block to block. And over the course of the day, they build up bigger blocks sometimes, but essentially there's a high and a low, there's a pattern, breakout pullback, continuation, breakout, pullback, reversal, or just a trading range, I want to have at least 40 to 50 pips minimum as a profit target, ideally more. We want to know that there's some structure, there's a basis for my trade based on my best playbook setups for selling high, buying low, or trend trading. And I want to be able to manage my risk and have an asymmetrical profit target to do so. So 20, 25 pips maximum risk. And if you think about that just in terms of the numbers, if they've locked in a level for a trend trade or for a reversal in there and you're getting filled at numbers, if it goes to the next number level against you, you're wrong. And I don't want to be wrong more than that amount. So the best way for me to control that is to just put it all in, program it, just like a computer algorithm. Done. Walk away, except put a couple of alerts in, come back in 15 minutes. In most of these trades, when they're right, they're already moving in the first 15 minutes. There's very little stress against your trade. Now, I'm not talking about chasing the swings and everything else. I'm talking about when they lock in a level in the timings and they're going to shift the market for a reversal or a trend trade, they move quickly. And I'm sure that some of you have already experienced that if you've been in those trades. There's very little stress against your trade. They move fast. So again, just identify your instruments, the timings, your edge. For me, these are the steps that I keep going through every single day because I can bring that to the table every single day and I can focus on my A game, and whatever mistakes I make each day, I just try to shave that out, get rid of it, make less mistakes. If it's impulsive, if I'm getting in too early, or if I'm chasing stuff from FOMO or anything else, I got to figure out how do I need to get rid of that. And that's what it's about. Keep eliminating the variables out, get 1% better every single day until you can make it so simple that it's almost impossible for you to stuff up. So just to review real quick, the first thing I like to see is a break of a previous day's high or low. That tells me again, like we talked about, I know there's other time frame traders in the market, maybe institutions, big players, big money, and whatever move may be setting up, I know that there's other money now in the market that potentially can help drive that trade as it's setting up. So I'm talking about, this is before we come to the screen. I want to know that something's happened or they're around that level, because now I know that we've got something that's in action, it's in play. If we stay inside of here all day, now I know we've got a market that's going to trade back and forth. I hate that. I don't like trading those. I will come back at the end of London or in the beginning of New York to see if over the course of that day they've built up something to sell it high or buy it down low for 50 pips or more. But typically when it's inside, I don't like that, because now we could be in an inside day or a range bound day. If it breaks out like we saw yesterday, do they extend the range out as they did on a couple of pairs? They made a little rectangle for a sell high setup back to the Asian trade. So that brings us back to another thing. Who is in profit? Okay? Who's in profit? Always look at the trade of who's in profit and mark it off, because they will come back and get that trade from Asia. If this is the guy in long in Asia, London might come back and get him. And then they might do 3 pushes and come back, hit the high just prior to the US Open or at the US Open, come back and bring it back down 50, 175 pips, whatever. So timings wise, we want to know when the market's in a 12 candle window, if we're up high, is the stop, had they done a stop hunt to the top side, or do they stop hunt back into the trend for a continuation, right? Pullback, breakout, pullback, okay? If they do 3 pushes away from the trend, think about going the other way. If they do 3 pushes into the trend, they're probably going to go back to the high or to the low. If they do 3 pushes sideways, we could be in a peak formation, 3 peaks, right, for a reversal, or coming back up for the bottom. Descending triangles, ascending triangles, structure and pattern. At the timings, the hour prior to the market opening is typically a stop hunt or a trap if they have not already hit the high or the low. If they have already put a high or a low in place and there's been a shift, they may be going back one more time to stop hunt traders who have got it right to get them out at break even, to scare them out. They haven't taken anything off the table. They'll consolidate inside of that peak, whether it's down low or up high. Again, one last hit to get anybody who's out at break even, or to scare them out of getting out of the trade before they make the move the other direction for 50 or 100 pips. So sometimes if you're already in the market early, you know that you might get, you've been stopped out probably, or you've had to hold on through some stress because you can't tell what the market's going to do because they come back fast, 1, 2, 3 into your trade, and that scares a lot of traders out because now they think they're going to hit your stop and you want to get out at break even or get out with something off the table before they make their real move. And then you watch the market go away painfully in the original direction that you were trading in without you. So that's really important to understand. 3 pushes. And we're going to go a bit more advanced. I've had a lot of questions about the 33 again and the 3 pushes. We're going to go over those examples in the next couple videos. But today I just want you to focus on timing and price. Timing and price, and think to yourself, if the market is hitting a level or fitting your trade thesis, think about timings and the ends of the hours and the beginnings of the hours, and then the end of that 15-minute candle that's going to confirm your price, waiting for that last minute, because they can trick you and move that market another 15 to 20 pips in less than a minute sometimes. It'll take off and hit stops, but often when they're done their work, it'll just piddle around back and forth, and that's what makes people not sure which way it's going to go. But if you've got your thesis locked in, your narrative's been presented, you're confident, I place my limit order in the market with the stop and my profit target, walk away for at least 15 minutes, set an alert to know if I got filled, and then I just let the trade take off and do what it's going to do. If I'm wrong, I already know what I'm going to lose, and I know I'm not going to stuff that up. I'm not going to move my stop. I'm not going to average into a loser. I'm not going to hold on and give it some wiggle room, because I know that in my experience, that has never worked out well over the longer term in my advantage. And that's what usually will cause you to blow up your trading account, take bigger losses than profits, and make you question everything about trading. But when you can duplicate something over and over and over again and eliminate the variables, you can come back each day, right? Bringing your A game, and then just working on this and making sure you're at your best at the screen each and every day to execute your strategy to the best of your ability. So hopefully you got some value from today's video, traders. Again, thanks for all the questions and comments. Thank you for hitting the like button and sharing this video. I've had a lot of people reach out to me, and I really appreciate that. We're going to look at yesterday's trade examples and we'll review those. Have a great trading session, and may the markets go with you.
Good day, traders. Stacey, Burke, continuing our discussion on time and price. And it's important to review the trade setups and understand how you can deconstruct them and do them better in live time. Because that's what it boils down to, is deconstructing the trade and understanding, even if you did take the trade, how you could have performed maybe better or bigger. If you did things well, whatever you did to get the most out of a winning trade. And I talk about each day just sticking to the basics, marking off our highs and lows, marking off whenever there's been a breakout, understanding that markets, we talked about this, 12 candle window in Asia, they break out of a smaller geometrical pattern, stop hunt down, continue the move, extending the range outside in that second 3-hour window, taking out the swing high from the rollover. We had news yesterday, and this market just continued to trend before pulling back in that 3rd hour. Now, I had some traders message me and ask me, well, why wasn't that a short? Well, there's nothing been happening. This market's been trending. That's a trend. That's a breakout. So all that is now is a pullback. Some traders may have taken this long. But again, all we have now is a pullback and a new high, and we're outside of our 12 candle window. So there's no textbook setup there. But what they have done is they've done one push, two pushes, three pushes into the trend, and then a 1, 2, 3 into stop hunting the high just prior to the 12 candle window. They reverse that with an engulfment in our 12 candle window, and they come down 1, 2, 3, 1, 2, 3, 1, 2, 3 to the low of the day, getting the traders who were long in the breakout in Asia. So they've stop hunted the traders who were long in between in the gap time. They've hit the stops at the high of the day, come down 1, 2, 3, got traders chasing this long again, and then did a 1, 2, 3 down. So again, this cluster, it's still a 1, 2, 3. Consolidation 1, 2, 3. They hit the stops, and then there's an engulfment in our third hour on the first candle. So again, just thinking simple in terms of price and time. What is happening? No matter what, we want to be selling high or buying low. Now, there was no pattern here. We were in a trend, and then the market has gone sideways. We have one push, two push, three pushes, and then a 1, 2, 3 to the high for a stop hunt. Some traders shorted this into the 12 candle window, and that market went 50 pips down. Now, again, just reinforcing, they sold high, so the stop hunt in this case was still a trade. Pulled it back, 1, 2, 3 down again, and then you're buying low after the stop hunt. They've hit the stops in Asia. They've hit the stops on the London traders. They've hit the stops on traders that have chased the swing. They've done their business, and now they've locked it in on the first candle of the third hour. So we don't know what this is going to do, but we know we've got a 1-bar stop. We're at the low of the session for the U.S. This is the low so far of the U.S. session. This is the low, and we've just come off of round numbers at double zeros. So very important. And then, of course, we get a 1, 2, 3 to the high for 100 pips. That market went 100 pips straight up through the high. Now, coming back to the original trend, 1 push, 2 pushes, 3 pushes to the high. So whenever we get this extended stop hunt after a second leg, you want to be thinking they've only moved that market up twice. 1 push, 2 pushes. 1, 2, 3 inside for the stop hunt to the high at the beginning of the 12 candle window. And then hit the stops, engulfment, reversal. Now, just again to reiterate, this isn't about hindsight. It's about timings, the pattern, the hourly rotation, and the candle formation and round numbers. So again, we're talking about making this as simple as possible so that no matter what, you've got a reproducible approach every day. So if you didn't sell up here, some traders may have went to a smaller time frame at the numbers. This engulfment at the high came at the end of the hour, and then the first candle of the 12 candle window was a stop hunt down, consolidation. Second hour at the market US Open is a stop hunt down. So the market opens in the US, taking traders into the trap. Trap, stop hunt, trap, engulfment, reversal for the trade. Pound New Zealand. Again, a similar setup. We had a breakout in Asia. So again, we're just going back to our basics. Okay, before we come to the screen in London, we've got our blue tracer from the previous day's high. So it was broken. They broke out. Now we have a breakout. Pull back into the open of the London session. And then they go 1 sideways, 2, 3 to the high, 1, 2, 3 on the stop hunt. Okay, so some traders may have shorted that, thinking that this market was going to come back down below the trough. But again, we're in a trend at this stage. So even though we had a 1, 2, 3, we are in a breakout pullback continuation. That market, similar to the pound Aussie, 1 push, 2 push, 1, 2, 3, before reversing and they went 1, 2, 3 into the numbers inside bar. So we're going to talk a bit more about this in the next couple of videos, but identifying the highest bull candle when you're inside of a range after a 1, 2, 3, start identifying the highest bull candle, because on the 1, 2, 3, some traders entered in at numbers with a 1 bar stop for the move back down to the traders who are long in the Asian session. First of all, the low of the session in London. Once they hit that and went sideways, their 50 pips was already over. If they shorted it for 50 down, they got their 50 at the blue tracer, the previous day's high. They pulled it back and went down, got the traders from Asia before pulling back inside of the round numbers above 9,500, which is a significant round number, on the first candle of the third hour. And then a pin hammer in the second candle for the 50 pip plus move back up. Stop hunting traders who were short off the numbers on the third push, stop hunt into the high. Highest bull candle. We're going to go more in depth into that. One more just to review again. We got our pound yen. So a little different scenario. The pound yen in Asia goes up over 50 pips. Takes out the previous day's high. Auctions back down in that second 3-hour window before 1 push 2, 3 to the high, just prior to the news that was at the open of the 12 candle window, dropping down off the numbers, off the quarter level, pulling back inside bar and a stop hunt down for the continuation to the lows of the Asian session. Now, not to say there's a short up here. Some traders, again, may have shorted the highest bull candle after the news. The news was the first candle of our 12 candle window. So we had an engulfment take place with a 1, 2, 3, staying sideways underneath of the highest bull candle. So we have our double top formation in place. Just blow this up. Oops. Double top formation in place prior to the news, but they stay underneath of it. The news is uneventful in terms of any wicks or spikes. It goes sideways inside bar. They break out, forcing traders to chase the move. Okay, so the London Open opens up inside of the range, stop hunting back down to the Asian session lows, coming back up. So no trade in here for me, unless somebody was up top here. But what I wanted to talk about was the consolidation in the gap time, and then right at the session open, 1, 2, sideways, 3 to the high, inside bar at round numbers. Traders short the inside bar at round numbers or inside of the range with a 1 bar stop for the move back down through the lows of London. They had more than 50 pips to the low, 75 if they got in on the inside bar. But again, 1, 2, 3 big candles straight up into traders who were short from the news after in the London session. Inside bar at round numbers. 1 bar stop. Very important. Again, the stop hunt was to the high of the day. Now again, just to reiterate, the highest bull candle. So they went to the highest bull candle, but they didn't go past it. Inside bar. The big candle straight up like that on the third push is a stop hunt candle. Inside bar, short at round numbers on the break, or traders get in underneath, back inside of the range with a 1 bar stop. We talked about this. If you're in at numbers and your stop is at the next quarter level, the thesis is that they're done doing business up there. So you can fight for a better price somewhere between the high and the numbers for the move back down to the low of the day. We'll just look at the pound. Very similar to the pound yen, except prior to the news, they went up and formed a rectangle at the high of the day. So again, they had the W in Asia. Okay, they had the extended W. If you remember our video on M's and W's, they had the extended W for traders that went long. Okay, 3 pushes into the peak. The tail on top was the stop hunt just prior to the news. So they've actually flipped the book from buying to selling. Here's our rectangle. They sold at the top of the box, pin pinned to the high, dropped it down into the news. So again, no trading. There's news. The second candle, traders trade the breakout. 50 pip move back down to the low. Taking out traders long from Asia before coming back. One push, two push. And then a 1, 2, 3 vertical to the high to get traders who may have shorted the original short prior to the news, and then an inside bar off of numbers after the vertical candle for the move back down through the lows of the day into consolidation. So hopefully that makes sense. And again, just starting to notice they move the market up, they work the high, they work the high, they work the high, put the tail up top, flip the book for the sell back down. They work the high. Consolidation, 1, 2, 3 to the high, hit the stops, consolidate inside bar for the move back down through the low of the day. Look at the difference with the pound Aussie, pound New Zealand. Breakout, consolidation, hit the stops, pull it down, hit the stops, hit the stops. The stop hunt was down. The stop hunt is down for the move back through the high. This is a breakout. Breakout. It's not a stop hunt. That's a breakout consolidation and a 1, 2, 3 to the high. That's a stop hunt. That's a stop hunt. 1, 2, 3 down is a stop hunt again. And then a vertical move through the highs is a stop hunt trade all in one. So hopefully that makes sense. But this is a great example of flipping the book. After a move with a breakout in Asia, they flip the book, come back down the other way, then go back and stop hunt the traders who were short up top, and then move it down in the original trend direction before going into consolidation. Study these trades. Traders, understand how you could have traded them in live time. Deconstruct it right back down to your 12 candle window, to the timings, to the numbers, to the high and the low of the day. Stop hunt, trap, trade, trend. Have a great trading session. Stay focused. Keep getting better, and may the markets go with you.
Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.